All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk to you about a number that was released that I think is very important and was much, much better than expected, and it feels like nobody is talking about this. So I'm talking about the Producer Price Index. This comes out monthly. This is the index that the Fed pays the most attention to. The CPI data, which came out yesterday, gets much, much more attention. So this is under the radar, but this report was better than expected. I want to go through the results of this because I think this could potentially shift what the Fed does next week. Okay, so let's go straight to the report. Economic news release. This is from the Bureau of Labor Statistics. Producer Price Index News Release Summary. So this was put out today. And again, CPI was put out yesterday. For those of you who didn't see, that came in right as expected. That was a good report. The market reacted well to that. But today, PPI came out, and this is more of a leading indicator. So let's read the report. Producer Price Indexes, February 2023. The Producer Price Index for fiscal demand decreased 1% in February. Decreased. Seasonally adjusted, the U.S. Bureau of Labor Statistics reported today. Final demand prices advanced 3% in January and declined 2% in December of 2022. On an unadjusted basis, the final demand index rose to 4.6% for the 12 months ended in February. Okay, so what's all that mean? Because actually there was an awful lot said in that statement. It seems like a short statement, but there were three numbers in there, really four numbers that were critical, and they were all really good numbers. By the way, if you enjoy this content, please remember to subscribe to the channel. You can smash the like button. You can also hit the notification bell to get reminded every time we put a video out. A lot of news is happening. You can see the news is coming at us very fast lately, so those notifications are helpful. Okay, so this is a chart from Trading Economics. This shows the PPI over the course of the last year. So they just gave us three numbers. I want to go through them. Obviously, first let's go through February, which is the month they just reported on today. So if you look, again, just like the CPI works, there's a consensus estimate out there for what people think this number is going to come in at. The consensus was plus 0.3%. So you can see the actual came in at minus 0.1%. So that's what we just read on the other page. So that is actually a gigantic beat. So this came in much, much better than expected. But wait, that's not all. They also revised January and December. If you look down here, you'll see last month the consensus was they were hoping it was going to be 0.4. It was reported at 0.7 last month. Well, they have now revised that from 0.7 down to 0.3. So last month, which we thought was a miss and a bad sign, we thought this was a sign that maybe inflation was being more stubborn than we thought and things were moving in the wrong direction. This has now been adjusted down to the point where we actually beat last month, and now we beat significantly this month. Lastly, they also revised December from down 0.1 to down 0.2, so that one moved in the right direction as well. So all three of the last 3 months are now better than expected. We're going to dig into the numbers and we're going to dig into why, and one of the things that changed a lot is something I'm sure all of you guys are extremely familiar with because it's been a big topic of conversation over the last several months. Okay, so let's go right to an article. This is from MarketWatch. I want to go through several headlines because they all bring a little bit something different to the table here. So this one starts right out. Eggs and other wholesale prices decline, PPI shows, and hint at easing inflation. So they start right out with eggs. This was actually the biggest change. So we know eggs have been spiraling out of control. Well, that seems to have shifted in the last month. Also, if you're interested, you can support the channel by becoming a member. You hit the join button on the YouTube page. It's right next to the subscribe button. We have about 50 plus members only private videos that are ready and waiting for anybody that joins. In addition to that, we have a once a week members only live stream, and we also have a members only Discord. So we have a great group, and it does help support the channel. So I really appreciate those who have joined, and you're welcome to join us. U.S. wholesale prices fell 0.1% in February, the second decline in 3 months, and hinted at some easing in stubbornly high inflation. So this is important. Obviously, this is what the Fed is worried about. Now, they've gotten sidetracked with a gigantic situation in banking with several of the banks, particularly the ones associated with cryptocurrency. So that has taken over the conversation. The number one thing that's been driving the market for the last year plus has been the Fed. And the number one thing that's been driving the Fed for the last year has been inflation. So you can see these are very strong numbers to show that inflation is coming down. Wholesale costs often herald future inflation trends. So that's important. important. That's why this is considered a leading indicator of inflation. The initial report, and they're talking about the January report, had added to the perception that inflation was not likely to slow quickly. So that report has been revised down, which completely changes the context that puts that report in. Instead of missing and going in the wrong direction, we actually beat on inflation in January, and now we had a big beat in February when measured by the PPI. A separate measure of wholesale prices that strips out volatile food and energy costs rose a mild 0.2% last month, the government said Wednesday. That was also below Wall Street's forecast, so that's another beat. Okay, and then lastly, notably, wholesale egg prices sank 41%. So we know the price of eggs has been spiraling. It's been at the top of the news. It's been one of the biggest pieces of inflation, and it looks like this month they're saying the prices sank 41% this month. So we should see that in future months at the grocery store. The cost of eggs has soared since the fall, doubling in price in some parts of the country. Okay, a little bit later in the article, they say the PPI report captures what companies pay for supplies such as fuel, metals, packaging, and so forth. These costs are often passed on to the consumers at the retail level and given an idea of whether inflation is rising or falling. So then they say, big picture, the rate of inflation has slowed from a 40-year peak last summer, and the latest PPI is encouraging. Okay, so what does all this mean? So I want to circle this back around to the Fed. We have a Fed meeting next week. Next Wednesday, we're going to see if the Feds raise rates. And you'll notice I say if they raise rates. In the past, the way we've looked at this is how big is the Fed rate hike going to be? They've raised rates at every single meeting for the last year. This month, all of a sudden, there's a possibility built in that they may not raise rates at all. So I'm going to take a look at this chart and talk about it. There has been an unbelievably huge shift in what the market futures think the Fed is going to do next week. And every data point that comes out keeps making it shift lower and lower. So the banking crisis last week definitely changed the entire picture, but now it's changed again, even day over day with this PPI report. If you go back to 1 week ago, you'll see that was 78.6% chance. The futures had built in that we were going to have a 0.5 basis point rate hike. So that's a very, very high number. That's the market with relative certainty thinking that the Fed was going to do 0.5%. So you'll see as of yesterday, that was 0%. Okay, so literally I just pressed refresh. So I pulled that screen up about a half an hour ago. So when I pressed refresh, this has already changed in the last half hour. So as people are digesting this PPI report, almost 58% of people think that the Fed is going to do a 0 rate hike at the next meeting, which is next Wednesday. So that is now a majority. So we went from 0% of the people thinking that for the last year to 58% of the people thinking that that's going to happen next week. All of my previous videos, you'll see I've been saying all along 0.25, 25 basis points is what I think they're going to do at this meeting. Even when the market shifted to 50 basis points, I said, I think it's a knee-jerk reaction and that will change back. Well, now the market's shifted even below that to 0. So I am still going to say I think the Fed is going to stay the course and do 25 basis points. So I'm still sticking with that. I think to make a move in either direction would spell a little desperation one way or the other. So I don't know that they're going to go to 0. I think it's a little too soon for that. But I must admit, I'm a lot less confident. This is the least confident that I've been that they're going to raise rates 25%. I thought that was almost a certainty. And now with this change today, even the change in the last half hour since I've been making this recording, a 0% rate hike seems to be growing and growing and growing in possibility. If this happens next Wednesday, if the Fed comes out and does 0, it's my opinion that the market is going to rally massively. So obviously that's speculation. We don't know what the Fed's going to do. So of course I have to remind you this is not financial advice and I don't know the future. So we're going to have to wait and see what happens. So it looks like right now, my best guess is 25 basis points, but the market disagrees with me. The market's building in now a 0% rate hike for next Wednesday. So we'll keep a close eye on this, and it is going to affect the market. So I think this was a big deal. I don't hear a lot of people talking about it. At this point in the middle of the trading day, the markets are all red, so there's a pullback. I think that's going to be a temporary situation. I think once this sinks in, this should, in my opinion, cause the market to continue to have a little bit of a rebound or a rally. So we'll have to wait and see what happens, but that's what I got for you on PPI. Thanks so much for watching. If you made it this far, please remember to subscribe to the channel and smash the like button. We'd love to see you there. Thank you to all the existing members and thank you to everybody for watching. So I will see you in the next video.